Assalamualaikum. Today we would like to present about the use of monetary policy in Malaysia during COVID-19. This is our group members. I will begin with introduction of monetary policy. Monetary policy is a vital aspect of a country's economic management overseen by central banks like the European Central Bank and the Federal Reserve. It involves regulating money supply and interest rate to achieve macroeconomic goals such as reducing inflation, fostering economic growth, and ensuring full employment. Tools like open market operations and reserve requirements are employed to impact the money supply. Interest rate play a key role influencing borrowing costs and economic activity. Unconventional methods like quantitative easing can be used during economic challenges. Effective monetary policy requires coordination with other economic factors, global conditions, and a careful understanding of the transmission mechanism. Central banks aim for macroeconomic stability and long-term growth by skillfully adjusting various measures in response to dynamic global conditions.
I will explain about what is money policy used in Malaysia. Bank Negara Malaysia has announced the adoption of certain policy measures today. These initiatives are intended to improve the efficiency of the intermediation process in providing finance for productive economic activity, as well as the efficiency of money market operations in allowing interest rates to reflect underlying liquidity conditions. These policies also seek to reinforce the main thrust of policy in order to attain the goals of monetary and financial stability. Bank Negara Malaysia attempts to implement monetary policy that maintains a modest and predictable rate of rise in the general level of price of goods and service, taking into account developments in the economy and the forecast. The ultimate objective is to achieve monetary stability that supports Malaysia's economic sustained growth. Bank Negara Malaysia implements monetary policy in Malaysia to fight interest rates in the economy and foster monetary and financial stability. Malaysia's principal goal in monetary policy is to preserve price stability while assisting in the financing of economic activity. Next is key aspects of Malaysia's monetary policy. First is overnight policy rate. The OPR is the key policy rate used by DNM to influence interest rates in the economy. It was introduced in April 2004 as part of the new interest rate framework. Second is Monetary Policy Committee. The MPC is responsible for formulating monetary policy and policies for the conduct of monetary policy. It meets at least 6 times a year to deliberate on the appropriate level of the policy rate. Third is Central Bank Securities. BNM issues central bank securities such as Bank Negara Monetary Notes I, BNMI, and Bank 1 more to manage liquidity in the financial system. Last but not least is interest rate framework. Malaysia has shifted to a market-based interest rate framework, which includes the OPR and other policy rates.
Okay, next, we move to the tool of monetary policy. Monetary policy refers to the action taken by central bank or monetary authorities to manage the money supply, interest rate, and overall economic environment with the aim of promoting economic growth and stability. There are two main types of monetary policy, expansionary and contractionary. The tool used to implement monetary policy can be broadly categorized into 3 types. One is open market operation, interest rate, and reserve requirement. Involve the central bank buying or selling government securities in the open market to control the money supply. Expansionary monetary policy increase the money supply by purchasing government securities, while contractionary monetary policy decrease the money supply by selling them. Interest rate. Central bank adjusts interest rate to influence the money supply and credit condition. Lowering interest rate can stimulate economic growth by making borrowing more affordable, while rising interest rate can help control inflation and slow down economic growth. Okay, the last one, bank reserve requirement. These are the minimum amount of reserve that commercial bank must hold against their deposit liabilities. Reducing reserve requirement can increase the amount of money that bank can lead stimulating economic growth, while increasing reserve requirement can help control inflation and reduce credit growth. So how do reserve requirement work in monetary policy? Reserve requirements are set by central bank and determine the amount of fund the financial institutions such as a bank must hold in their wealth of the central bank in proportion to the deposit made by their customer. By increasing the reserve requirement, the central bank reduces the amount of money available for lending, which can help control inflation and prevent excessive credit growth.
So I will explain the monetary policy before and after COVID-19. In this video, I will explain three factors: open market operations, statutory reserve requirement, and the overnight policy rate. For monetary policy before COVID, the central bank undertakes frequent open market operations to address the banking system liquidity needs. They may also conduct outright purchases of government securities in the secondary market to further increase reserve. While priced at a premium to encourage market activity, the bank's lending requires high-quality collateral to ensure border access and stability. Based on the statement issued by Bank Negara Malaysia in November 2019, they informed the public that the statutory reserve requirement ratio will be reduced from 3.50% to 3.00%. The decision to lower the SRR was made in order to ensure enough liquidity in the domestic banking system. This will continue to promote the smooth operation of domestic financial markets and make effective liquidity management by banking institutions possible. Bank Negara Malaysia also state that OPR was decreased. It began 2019 at 3.25% and decreased twice during the year, eventually finishing at 3.00%. Overall, Malaysian interest rate fell in 2019 due to worries about global economic growth and trade tensions. To stimulate domestic economic activity, the BNM aggressively relaxed monetary policy by decreasing the OPR. While for monetary policy after COVID, BNM navigated the post-pandemic landscape with flexible market operations. Initially, they injected temporary liquidity through frequent term reverse repo options, outright purchases, and fixed deposit. As the economy stabilized, BNM transitioned to a more market-driven approach, encouraging banks to rely on interbank borrowing while still offering targeted OMOs for specific sectors like SMEs. In March 2020, Bank Negara Malaysia announced that the statutory reserve requirement ratio would be reduced by 100 basis points from 3.00% to 2.00%. This helps ensure enough liquidity in the banking system to meet financial obligations and stabilize the economy. BNM aggressively cut interest rate OPR by 100 basis points after the pandemic's initial shock in 2020 to boost economic activity, support businesses, and maintain financial stability. However, as the economy recovered, BNM gradually raised the OPR starting in 2022 to manage rising inflation and support sustainable growth. Currently, the OPR stands at 2.75%, balancing economic growth with price stability.
Now, I will explain for the issues that rise in time COVID-19. Many matters come up that have an impact on Malaysia's monetary policy. There are several issues that Malaysia faced during the COVID-19 outbreak. First issue is economic construction. It caused a lack of economic activity that drives the need for accommodative monetary policy to stimulate economic recovery. Next, reduced consumer and business confidence, also the issue that faced Malaysia during COVID-19, because it is declining due to fears of infection, system upgrade, and uncertainty about the future. Job losses and unemployment, also the issue that rise in time COVID-19 for Malaysia. Then, a pandemic COVID-19 causes increased volatility in the financial markets of Malaysia. Furthermore, there are also matter of Malaysia coordinate fiscal strategy during the COVID-19 pandemic that has brought up that governments and central bank must cooperate each other. Other than that, the COVID-19 pandemic also has caused supply chain disruption that affecting the manufacturing and distribution of product and service in Malaysia. Moreover, inflation dynamic also the issue that need to solve by central bank because it will be impact on supply and demand. Central bank must determine whether the dominating force are deflationary or inflationary in order to modify monetary policy. Last but not least, the issue of exchange rates fluctuations during COVID-19 pandemic, which Malaysia and whole world are facing. Capital flow and the state of the world economy have an impact on the value of currency. For maintain stability and competitiveness in global trade, central bank must control exchange rates. Based on my opinion, to respond this issue, Malaysia Central Bank or Bank Negara Malaysia (BNM) have implemented various measures in solving this issue.
Development on monetary policy system after COVID crisis. Number one is digital currency and payments. The COVID-19 outbreak clearly has accelerated the shift towards cashless payments. It was meant by using digital payments all across online transactions. This led Bank Negara Malaysia to receive a bigger as a lot of money goes in and goes out as people are spending, thus it benefits the economics. Number two, flexibility and agility on approaches. The outbreak definitely gave Bank Negara Malaysia a huge flexibility changes in monetary system. They become flexible in terms of implementing interest rate cuts, determining the conventional monetary tools such as quantitative easing and digitalization. Number three, changing the overnight policy rate or known as OPR. OPR was at the lowest since it was introduced in 2004, which at 1.75% from July 2020 until May 2022, in order to support the economy. In tough time, low interest rates makes borrowing cheap and lower the return on savings. This helps to spur spending, boost investment, and protect jobs and income in time of the crisis. Next, how monetary policy system works during COVID outbreaks. Number 1, by interest rate adjustment. Bank Negara Malaysia slightly reduced their key policy interest rate to encourage more borrowing because it becomes cheaper than usual. Number 2, by currency interventions. By involving in foreign exchange market, Bank Negara Malaysia could bury a stable route to stabilize the Ringgit Malaysia currencies. Number 3, by credit facilities. Bank Negara Malaysia expanded the credit facilities to provide extra support to specific economic sectors that face liquidity challenges. Number 4, by engaging in liquidity support. Bank Negara Malaysia has been engaged in open market operations in repurchase agreements transaction to provide short-term liquidity to institutions.
The advantages of monetary policies during COVID-19, central bank around the world, in a coordination with the fiscal authorities, have been extraordinary measures to mitigate economic fallout and support recovery. These actions were clearly much needed as they probably help avoid a complete breakdown of economic system. There are 4 advantages of monetary policy during COVID-19. The first one is mitigate economic fallout. The monetary policy response, including asset purchase program, has helped mitigate the adverse effect of the pandemic on the economy. The second is supporting recovery. The Federal Reserve action ensure that credit continue to flow the household and business, preventing financial market disruption from intensifying the economic crisis. Next is preventing financial market disruption. The Fed actions such as lowering the cost of borrowing for households and businesses have prevented financial market disruption from intensifying the economic downturn. Okay, the last one is stabilizing the economy. The monetary policy and fiscal policy responses have been effective in stabilizing the economy, as evidenced by the decline in the unemployment rate and the increase in real GDP.
Next, the downsides of monetary policy crisis to COVID-19. First, price instability. During the crisis, it led to the insecurity to the price globally. This is because of the occurrence to disruptions in supplies while demand for goods are increased. Due to the on-demand, it creates an uncertainties in the global economy. Second, inflationary risk. The bad sides of the virus attack is that inflation could occur anytime. Even Malaysia has taken some actions toward the problems. By this reason of high demand, supply chain suspensions, increase in production costs, and monetary policy response might push Malaysia economy to inflate. Number 3, discouraging imports. COVID has been limiting the goods import to our country that make Malaysia a short of need goods to live on. Imported countries limit their goods to be sent to countries as they also have to take a careful measure to live during the pandemic. By those time, Malaysia government has been focusing to receive only essential goods such as medicines and medical supplies.
In conclusion, Malaysia's monetary policy focuses on maintaining price stability and economic growth. Bank Negara Malaysia implements monetary policy through a range of tools, including open market operations, reserve requirements, and interest rates. In recent years, BNM has prioritized inflation management and economic growth. The bank has lowered reserve requirements and interest rates in an effort to encourage lending and borrowing. Additionally, BNM has engaged in open market operations to increase the financial system liquidity. These policies have aided economic growth, but they have also led to growing inflation. BNM currently has the issue of balancing the need to stimulate economic development with the requirement of controlling inflation. Throughout the upcoming years, the bank is likely going to keep using a variety of monetary policy tools. BNM will need to closely monitor the economy and alter its policies as needed to accomplish its aims of price stability and economic growth. Furthermore, Malaysia's COVID-19 monetary strategy aims to control inflation while increasing economic recovery. BNM effectively reduced interest rates, provide target lending programs, and assisted in the recovery process through financial market interventions. However, increased demand, supply chain disruptions, and global uncertainty bring additional concerns. Finding the right balance between growth and price stability will be vital as BNM navigates the road ahead. Throughout the upcoming years, the bank is likely going to keep using a variety of monetary policy tools. BNM will need to closely monitor the company and alter its policies as needed to accomplish the aims of price stability and economic growth. Balancing price stability with economic growth will remain a complex challenge for BNM, but its adaptability and proactive approach to policy give reason for optimism.